How's it going, Value Venture Investing here today? So today we're going to be talking about Apple. This is a good one to stick around for. I'm going to be talking about what I think the value of Apple should be. We're going to be talking about the tariffs, the big T words. We're going to be talking about the current Q2 earnings that just came out. So stick around because we're going to get into this a little bit later in the video if you guys stick around. Apple, as I said, just had their Q2 earnings today. After hours, it's not going great, down about 3.78%, but I expect this might erase a little bit. Of course, we've seen this huge hit on Apple recently. We're recovering a little bit with all that, excuse me, with all this tariff stuff. But today we actually saw a beat, and the quarter was actually pretty good. Year to date, we're still up 26%. So the first thing we're going to go through here is we're going to go through Q2. And we're going to base it on a year-over-year basis. Then we're going to go a little bit more into those financials. So yeah, I mean, I remember probably Q1. I mean, Q1's always a good quarter. I remember when we were having like $95 billion quarters not too long ago. This quarter was 95 on a Q2, 95.35 billion, up over 5% year over year, about 90 a year ago. EPS was up about 7.84%. Of course, they're buying back a ton of shares, and we're going to be talking about that as well with their capital return program, which is the reason why their cash is dropping, right? We're at about $132 billion in cash. They want to be cash neutral. It was 156 a year ago. We can talk about what we think they should be utilizing with their cash, what they should be doing, and we'll get into that a little bit later. Now, in terms of iPhone revenue, again, so it was good. It was up 1.91%, roughly 2% year over year. Definitely a beat there, 46.84 billion. Mac revenue is really good. I've been talking about Mac quite a bit. How amazing their new products are. We're up, over 6.5% year over year, $7.94 billion this quarter. iPad was even better, over 15% year over year. And the only blemish, if you will, is wearables, home, and accessories. I guess they really haven't had that many new products in this category. They're down about 4.93% year over year. But again, the services, the big dog, services here up over 11.5% year over year. Yet again, $26.64 billion. It still even beat last quarter, Q1. So getting into these details just a little bit more here. As we said, it was 95.359 billion. Services, again, are keep making a larger and larger portion of that. 26.64 billion of that was services. And look at a year over year, it was 23.8. So these are billions of dollars, right? This is how much it's growing. The gross margin was still great, increased to 44.86 billion versus 42.27 billion a year ago. And again, they're still spending more and more on R&D. And I actually hope that we see some real innovation coming because they keep spending more and more and more, i.e. some new products, not just all of this buybacks, but this quarter was $8.5 billion. I was talking about this last year. It was under $8 billion. So it's increased that much as year over year. So of course their total operating expenses went up. This is probably the SG&A has gone up in proportion as well, so I'm okay with that. But regardless, their operating income was up 29.5 billion, which gave them a net income of 24.7 billion. A year ago, it was only 23.6. So, I mean, marketable improvement of the company. Sometimes I think that they don't get, the credit that they deserve. In terms of the reportable segment, I mean, it was great in every single reportable segment. It was up in the Americas. It was up in Europe. It was up in Japan, rest of Asia Pacific. Of course, the only spot that wasn't great was China. But I mean, look at some of these beats here. America's 40 billion versus 37 billion a year ago. This one's a slight beat. Japan, 7.2 billion versus 6.2 billion. And Greater China wasn't too bad. It definitely, I think it was about 2%. But during the conference call, they indicated that this is basically due to currency. They're basically, take out the cost of currency, they're basically flat. And there was a lot of concern that maybe it was, there'd be retaliation going on because all the massive tariffs and stuff like that. We're going to get into that in this video. But yeah, no, it doesn't seem to affect it much at all. In terms of the net sales by the category, Again, we saw iPhone increase 46.8 billion versus 45.9 a year ago. Mac increased, iPad increased significantly, huge. And of course, the only one here went down slightly, like I said, was wearables, home, and accessories. And services again was great on a year-over-year basis. So fantastic. I mean, really a fantastic quarter as far as I'm concerned, especially with the turbulent times that are going on right now. So what were they saying? What were they talking about in the conference call here? Now, of course, the first thing that they're going to say, they're going to be talking about suppliers. With Trump, it's all about having to be built in the U.S. He talked about all of the U.S. suppliers that they're going to be relying on. I think, if I recall correctly, Apple's going to spend something like $500 billion in like net investment in the U.S., right? So they talked about that as well. And this is what I found very interesting here as well. So there's obviously a lot of questions about tariffs. The first thing you got to realize, and sometimes I think that Apple doesn't get good credit for it, is like Tim Cook. He's a supply chain guy, right? And it's kind of like what they're doing right now. There's a lot of complexities to it, but it's pretty crazy how well they fared, and I'm not too sure if this is being reflected in the stock after hours. So the June quarter, which is next quarter, India, as we know, if you've been following Apple for a while, they've been pivoting their production to India for quite some time, even before all this stuff that's happened this year, right? So for the next quarter, the June quarter, India is going to be the place of origin for the iPhone. And of course, that's what depended on whether there's going to be tariffs or not, right? Vietnam is going to be for, nearly everything else. And China is the big one that Trump's targeting right now with, over 120% or 114% tariffs, I believe. That's going to remain for sales outside the US. So they're really shifting their production depending on where they sell it, right? And of course, there's some other things as well. They're talking about semiconductors, some review that's happening with that. They were quite cagey in terms of providing any more information on it. But again, they don't know, right? And like I've talked about in one of my other videos here, guys, long term, you got to be a long term investor. We've been through this before. We've been through this in 2016, right? Like 2016, 2017, when Trump was in before, it was the same thing. Long term, all these things are going to be hashed out. Worst case scenario, he does the absolute worst. Well, in 3 years, things will go back to the way that they were, right? So, yeah, it could potentially be some short-term pain, but I think it's mainly negotiation. But I'd love to know what you guys think. Leave a comment down below. All-time high install base. Well, they say that every quarter, which is great, right? But I feel like it's something that I say basically absolutely every quarter. In terms of their guidance, like he said, we had limited impact on this quarter. They can't really predict going forward, but they're saying basically if everything remains same right now in terms of in respect to the tariffs, they're expected to add $900 million to their costs. So like their cost of their goods sold. But you got to think about that right now. Like $900 million, that sounds like a lot, right? I think one of the analysts asked a question saying, if we knew it was this low, like how is it this low and is it going to get worse? And of course, he wouldn't answer that question. But for a company like Apple that pulls in $95 billion on a Q2, that's only 20 hours of revenue. Like it's less than a day of revenue is what's going to impact them. Like the scale, it's nowhere near as bad as anyone thought. And even with that, they expect for next quarter, with everything remaining equal, that revenue is going to be growing low to mid single digits year over year. So kind of like we saw this quarter, right? We saw maybe 5%, something like that, right? So that takes us to, what is the stock worth? What is the stock worth? Of course, this is 1000xstocks.com. There's a link if you guys want to look into signing up. But this is just kind of based on out until 2027. We're right now, I mean, the average for Apple for, say, the last 10 years is probably, revenue growth around 7%, but we're looking at about 5-ish% right now. So if you're saying, we got 5% revenue growth for the next 2 years, I think that's low personally. And net income growth of 6%. Of course, we're growing that bottom line quicker because they're buying back so many shares, boosting that EPS, right? This is a pretty base case. Of course, I got onto the bull case here. I guess I should have put on the base case, but what could potentially, in terms of a PE multiple, what could we be looking at here? So right now, Apple's about a 34. So if you went where we're at right now, 34 to 40, 2 years out, you're looking anywhere from 282 to 332. Of course, Apple's like 211 right now, something like that. 213, maybe it'll be 205 tomorrow. I think Apple, this is just my opinion, but I think Apple's easily a $250 stock. And even at these growth rates, they're not blowing it out of the park. And some could argue that maybe their multiple's a little bit high at 34. They're at 280, 332, basically stock price. And, if Apple really starts putting some of that R&D into some other categories and start commanding a higher multiple, we can see this even higher, right? So, I mean, I hear a lot of people saying like Apple's stock price is not necessarily going to go anywhere. But with the pullback that we've seen, it's not bad. Like it's not a bad value when you're looking at, it could be a $300 stock in a couple of years, right? So that's just a quick and dirty. This is not like a dividend discount model or anything like that, but you know, that's kind of where I see it in my opinion. Now back to their guidance here. Um, One thing I found kind of interesting, they gave no guidance on services. Um, they gave it on revenue, but I mean, services has just been growing so fast. They didn't want to talk about that. In terms of the board, they authorized a $100 billion share repurchase program additionally here. So we know that's been going on like a ton. And it's going to continue. And of course, they're raising their dividend by 4%. Um, and that's going to be, increasing annually going forward. Um, but my question to you guys is like, would you like? They are spending a ton on R&D and stuff like that. But would you like to see them be investing that money in something else, because they're spending a ton on share buybacks, and of course that's supporting the stock price, right? Sometimes I feel like maybe I'd like them to see that cut in half, possibly look at acquisitions, maybe get more into the home. But even going the way that we're going right now, on kind of low case, it could be worse. Of course, it could be marketably worse if we actually get into like the full on trade war goes further and further. um, you could see a lot higher stock price if they did something like that. So that's just my opinion. I'd love to know what you guys think. That was Apple Q2 2025. Really good quarter for what we're going in right now. But we'll just have to see going forward what happens. We're going to have to see what happens with all these policies in the U.S. And see how they hash out. Thanks again for watching, guys. Don't forget to subscribe, like the video, and I'll see you in the next one.